Hi everyone, thank you so much for joining Archangel Alts. And this is going to be something that I hope is received as a really special message. I'm just going to kind of run the current positions that are happening on the market right now in the background. It's kind of exciting stuff. Here, I always end up fiddling with these windows when I'm thinking through stuff. So, Archangel Alts, we're here to help you with your trading cryptocurrencies. And this video is about the blanket point being, why should I be trading cryptocurrencies now? And something about exponential growth. What are we talking about? Well, the purpose of this video, I want to get you excited about the idea of what it is that we're looking to accomplish. And I want to put this on the right thing here. So here we go. So I will probably bounce back and forth between this wonderful site here. It's Rapid Tables. They have an exponential growth or decay calculator. And so I'm going to plug some things in for you so you can kind of see just some of the math behind what we have been doing and what has been working there. So just as I talk a little bit, I'm going to just let the market sit in the background again. I'm going to put it on the big guy, BTC to USDT and Tether. We are sitting in a pretty impressive place. There's a weird combination between the volume is still dropping. Maybe it's picking up a little bit. Let's watch for 3 seconds. It was exactly 3. Nope. So we're still catching up with it being weaker volume than it's been. It's still better than the 60 million we were seeing several days back. But, we saw 140, 180 million 24-hour volume traded against USDT, which is the largest of the stable coins representing $1. So the fact that it's able to maintain in the mid to upper 3900s is a good sign. Obviously, we want it to average 6,500. I think that that's the real market value for Bitcoin right now. But after the hard fork from the Bitcoin Cash teams, which split with each other, which split with Bitcoin, we have some issues in the value of the hash rates and the full network mining and handling transactions and doing all that computing. So I think that that answers exactly where the value in Bitcoin went, though nobody else is seeing it that way. Once you start hearing it out there, then maybe attribute it to this one weird guy over here just casually working our way through exponential growth. Why should you be trading cryptocurrencies now? First of all, let's make a distinction between investing and trading. Trading, we're not looking to gain advantage in the market through any means that are harmful to the long-term value of the cryptocurrencies. I believe in a very, taking wise, careful, well-calculated strategy-backed moves in the market. Taking small profits, but our trades that go through, buy and sell, add liquidity, which adds value. And all of that does actually encourage others to do the same, which adds value. Bitcoin is based on a model of scarcity, which is the right way to do things. So most coins are based on that as well. There's not many that have quite as smart as a cap. 21 million Bitcoins, and they started off for being worth a fraction of a penny. So when a Bitcoin was worth $1, that was a big deal. And when it went beyond the value of $1, that was a big deal. But that scarcity model means that it becomes harder to mine and there's fewer available. They're not going to, at any point in time, unless they lie against the cryptography it was based on, they'll never issue more Bitcoins. But as the market grows, there's always room for, even an increase in the perceived value of the market. So why is now a good time? Well, 3,900 is a lot better price for something that is bound to go up when the corrections in the market are right. And I say bound to go up, first of all, I do not have a certificate on the wall. I don't think that there are really any true blue expert professionals in the crypto market. There might be some people that understand stocks that are entering the market and they think that that's the way to go with crypto. It's still very much a different beast, just if for no other reason than the fact that there are two layers into the ecosystem, one from fiat and one into crypto to crypto markets. And that makes a huge distinction from any commodity securities, futures markets, forex. Everything that you're doing has a direct correlation to the fiat value. So obviously, we're not in a place where we stop thinking of Bitcoin in terms of how much is it worth in fiat. That will take at least another year, if not 5 or 6 years, before there's enough of a marketplace where everything could potentially be done in Bitcoin. If you can buy a car and pay your taxes in Bitcoin, then that becomes the more standard that people are thinking of in replacing fiat. I don't think that that's necessarily where things go. But the price is very good right where it is right now. It could go down to 2,800. That's kind of where I feel that if there is a floor, that's where the floor is going to be. Others are saying it could go as low as 1,000, and they're looking at the 2011 and 2014 and 2017 projections that trend could be there. Sure, it's possible, but there's also things, in fundamental analysis, the actual world surrounding the different projects that are very different from what it was 2 years ago. So just because the charts show that there's room for recapitulation, there's room for retracing and all sorts of other things, doesn't make it so. But there is almost nobody other than the hardest of critics that believes that it doesn't have a very high future value, starting at 10,000, 12,000. People are saying, within a few years it could be 250,000. All of those things are not only possible but likely. But so why shouldn't somebody just buy a Bitcoin and hold on to it and let it be a long-term investment? Well, I personally think that if you are doing an investment portfolio, you look into mutual funds, you look into high risk, high yield, low risk, lower yield, cross of any kind of stuff. Just looking at the most basic of mutual fund packages, letting brokerages trade for you and paying a premium. I would consider doing some long-term investing in, maybe Bitcoin and Ethereum. Once again, you do your own research, you make your own decisions. I am not a professional financial advisor. I'm somebody whose profession is being a very successful day trader in the crypto market. So at Archangel Alts, our goal is to make it entertaining and educational and provide a value by trading along with us with an accuracy rating that doesn't really seem like it exists anywhere else, unless you are one of those black boxes with secret codes attached to them in the stock market that allows you to jump ahead other people's trades, and that's a whole other issue. Really happy to see what's happening with TNT up there in the left corner. So we have some of our very few holds. Whenever there's another drop in the market, there's always a chance that you get stuck in that process. And obviously you can see this is where Bitcoin took a dip. This is exactly where the hard fork happened with Bitcoin Cash. This is exactly where it was also being compounded with the new stable coins being added to the market. People say, ETF being disapproved. I mean, I looked at the markets, I looked at the forums, the Reddit groups were saying about the same things. Half the people are saying, what is an ETF? So I don't think that's the reason that everybody started selling Bitcoin. So you can see since then it has recovered up to 4016. We're kind of trending in that direction right now. The more expensive it gets, obviously, the less that you can buy with the same amount of money. So it's a good time to get into the market. And then from there, Bitcoin is sitting at a fairly weak place in its overall lifetime here on the Binance exchange. This is the place that I recommend doing your trading from. These are fairly normal responses to this kind of, excitement and then disappointment, fear, uncertainty, doubt, FUD, and FOMO, fear of missing out, FOMO. All of this kind of stuff is normal human reaction, but there's also the bot stuff. But if you see just the very basics that I see here, and I'll make it a little bit more obvious by removing, some of this so you can see it better. This to me looks like normal response, although, I mean, there's no reason that it couldn't come back up earlier than that. But this does not. This looks like things might be leveling out in some kind of breakout, and some of that breakout actually happened within here. And this is looking at an entire week. So things thinning out over here, that makes sense. That makes sense. The thing is that they were already putting news out about the hard fork that was going to happen, and the people from those teams were already selling off some of their Bitcoin and repositioning their mining and preparing to go head to head with proving who had the most valuable hash rate and processing of transactions. So they were willing to lose millions, if not more than that, in order to win the official name of Bitcoin Cash, the two different teams. So this to me, is a drop that is going to sit there until there's enough strength to come back up from it. But also look at the fact that the volume to sustain things has been impressive, even in comparison to good things happening in 2018. So, I mean, this happened with not a whole heck of a lot of volume, just a lot of buy-ins. Something was propping that up. So this price is not going to sit down here forever. Anything even under 6,500 is a good value. But obviously right now it comes very close to, even if it just sustained around here, let's say, or even here, then you're pretty close to getting it at half price, and that's pretty amazing. The other part of it being that everything else in the market is the other 50% of the market. Bitcoin is still the king, and whatever happens with it is going to judge how everybody else sees any other altcoins, no matter how different or diverse or interesting those projects are. XRP is a transaction-based project, also known as Ripple. XRP is the coin that represents Ripple. They're entering the financial sector to provide lightning speed, very cheap transaction resolution, going from one place to another the way that regular banks just can't handle right now, and credit cards don't do well either. So they're recognizing the value in that. JP Morgan just came up with their version of it to go head to head with Ripple. They don't want them to have the market. Something that's going to become a buzzword. You heard it here first a few dozen times, and now I'm saying it again. But the buzzword for 2019 at some point for people in the know inside the market is going to be decoupling, meaning that everybody is kind of looking for an opportunity to become the next Bitcoin. They want their project to be the one that hits mass adoption first. This is the time for marketing and promotion for good-natured, real ICOs to do their thing. So it's a really, really, really big deal. The growth is backed by real-world examples. It's not all imaginary digital money just for the internet. They're real projects trying to do real things. STEEM, STEEM. I'm not trying to make recommendations, go all in on this or that or whatever, but just examples. STEEM is kind of doing what an early version of WordPress was trying to accomplish, but doing it with a proof of concept on the blockchain. So, for instance, being able to have a blog community that gets paid for giving good content, and people get paid in other ways through the STEEM network by responding and interacting with that. And also letting other people know about it. And then there's also DTube, decentralized tube, meant to show a proof of model or a proof of concept for a YouTube competing blockchain-backed decentralized video network. And in my opinion, it's showing that blockchain has a way to go. There are things to resolve because there's bottlenecking from it not being a global server-based thing yet. So, there's a lot of bogged down. Video still takes a lot to stream. YouTube has done fairly amazing at the part that we don't criticize them on as far as making the videos available billions of times and not being down 99.99% of the time. So it's pretty impressive, and passing a good flow through for the streaming speed. Lots of different interesting projects out there that hold their value, and there's a lot of volatility with all of this. Obviously, anything that's going up and down by, 1%, 10%, 20, 30, 40, 50, 60, sometimes percent, and then actually recovering after doing so. There's a lot of volatility. That is true. But that's what we're good at. We don't see volatility as a bad thing. Really, the only time that volatility is bad is if you're trying to take your profit and your coin is worth less in dollars than where you started. So, we have a long-term growth plan that does not matter what the current price of Bitcoin is. What matters is the 24-hour volume, its market capitalization, what its actual worth is compared to the other coins. Yes, we have tested the same kind of model going back and forth between Bitcoin and stable coins. And if Bitcoin were to suddenly shoot from $3,900 to $100,000, yes, we would park it in one of those stable coins immediately. Might even sell off some of the other stuff at a loss, because that would sweep up so much of the loss it wouldn't even matter. And then wait for it to drop again and then go right back in and doing what we're doing. But our long-term goal is based on exponential growth. And so if you subscribe to our paid channel, it's $99 a month reoccurring, which means that for $3 a day, whatever you have to invest in the market, all of that money is yours, but you're going to be learning all of the really deep, in-depth, intermediate, and advanced, not just the beginner stuff, of why we trade the way that we do, how we trade, and why the long-term version of that is a huge payoff compared to trying to grab large percentages or get involved in pump and dump groups and, short sheeting things that are, more profitable in a longer play. So at the same time, we're trying to be very aggressive with a very cautious model, meaning that we are constantly round the clock looking for the best solutions to take advantage of while doing so at very low percentages. So let me show you why that works. This is going to be just a very basic version of this. So we'll go extremely in-depth in helping you to plan what your model is going to be. Let me set this up for full screen so it looks right. So I think we're good here. And once again, I grabbed this. I just find it very easy to just run to a window, plug stuff in. It's very fun. Rapid tables, we actually use their percentage increase calculator. Let's say I had a coin that was at 100, and I wanted to find out, how to get my 0.5% profit from it, so that I'm paying for my fees at 0.2, and that would be 100.7 is all that it would have to do. So let's say I wanted to do something at 1,27943. I'm not necessarily going to, immediately know the 0.5% on that. So this tells me that I would need to see a range of 895 no matter what that is changing from. So that would be in this field right here. So basically 12.7 something would need to be 12.8 something, and that, down from a percent, not exactly run off there. So very helpful site, Rapid Tables. We use their subtraction calculator when I go through and want to test the range of what I just cleared in positions that are broken down into multiple parts. And so for that, I use my sum calculator. I'll just paste the buys and calculate, and then paste the sells and calculate, subtract the buys from the sells and find out what it is, and then come over here to CoinMarketCap and plug it in and find out how much it was. So, slow and steady wins the race, and that's exactly how we work this stuff. So that's where the exponential growth comes in. This should get you excited about wanting to trade crypto. And it's very different because the fees are lower right now on Binance Exchange than anything you would find in trading stocks, maybe except for Robinhood, which its system, in my opinion, makes it pretty tricky to be able to buy and sell on the kind of margins that we're doing, the kind of profit margins that we're doing. Even though they offer free fees and stuff, the system is not anything as technical as what you can do on the Binance Exchange, and it's so smart and fast and easy. And it's crypto. Crypto is a very different market, very different pace, very different volatility from anything, even penny stocks. It's, in my opinion, the way to go. I am tuned towards it. It's not right for everybody, so not everybody will respond the same way. So let's say that we want to find out what is your starting trade size and what kind of percentage do you expect to be able to get from that trade size. I'm plugging in 0.5% because I'm telling you right now that the market is not a safe place to just ride things straight up whenever they go shooting up and then hope that you guess the right place to get 5%, 10%, etc. The other thing is that people have this perspective that, I just need to buy the right coin and hold on to it and it's going to go up 50x, 100x. That may happen in a year or 2 years, but I promise you this is much more promising than the 10x, 50x from a single purchase, and you are able to kind of find the process that works the best for you. So let's just say that I want to say, I'm on day one on my first trade and I want to figure out how this works. So I have $100 I'm going to put on a single position that I've, chosen very carefully, and I want to just get 0.5% out of that one position. Okay, you will make 50 cents. So this is actually, according to over here, you would actually be doing 100 at 0.7 and assuming that 20 of those cents are going to pay for your fees. What I have found is that the fees, generally speaking, usually come out no matter what I seem to do over how many hundreds of different trades and thousands of trades, usually ends up being 10%. So, it's only 0.2% when you put the buy and the sell together. It's 0.1 to buy and 0.1 to sell. But if you use their Binance's coin for your fees, you get a 25% discount. It used to be 50%. Now they're in their second year. They're doing 25% discount. So 0.15. But I always just assume that I'm doing 2. Then I don't have to worry if I accidentally ran out of BNB coin and need to load some more up. I'm still right about my margins. So ain't no problem there. So let's say that you did $100 at this and this. Okay, now I'm going to bring a normal calculator into this. So let's say that you do 10 trades using the same formula. Well, the exponential growth is now bigger than what you would calculate if you did this the same way, just linearly. 100 times 0.005 is 5% equals 50 cents. That's the same that we got for the 50 cents the first time there. And then times 10. You're going to find something very logical that'll happen. Unless I put it in wrong. 100 times 0.005 equals times 10 equals that plus 100. So there you go. You would have 105, but over here you have 11 cents. Well, who cares, and what does that mean? What we're doing is we're compounding. We're not taking anything out until we reach a first goal of some sort, and then we continue from there. So, we've tested the withdrawal and deposit, making sure that all these different things in the flow of the system works right. It is, in fact, true that things work better on the market the larger that you are able to invest. But we started from humble beginnings, and we've tested it in, actually we tested it in this range. We actually did it with 0.0018 was the smallest size of trade in Bitcoin that could guarantee that any coin would go through, because some have a very low value. Sometimes they don't have something to round up or down to. It should be the Bitcoin version of $10 a trade, or 0.001001, but we found that this clears any coin. So we started there trying to do as low as 0.3. And so we did this like literally hundreds of times. Our first 1,170 trades were all successful, and we earned our 0.0018 up to 0.059 minus about 10% in fees. So we actually saw, lower margins and less value above the fees, but we tested the model, and the only thing that I regret is not scaling it faster and trusting my own instinct faster, because we would be much further by now. Okay, so let's look at if we were doing 200 at 0.5, one trade would give us $1. So let's say we did 100 trades. I'll show you what it would be if you weren't doing exponential growth. You would have $200 that you just kept using over and over again times 0.005 equals this, times 100 equals this, plus 200. So we would be from 200 to 300. And yet, look at this. You have $29.33 more from your first 100 trades at $200 a trade at 0.5% than you would have if you just kept at the same trade size and did not add your profits back in. So yeah, you could do this with the plan of doing, lots of trades until you take out $100 on your 200 and keep trading. The thing is that, first of all, you're going to make mistakes. You might be, 60-40 and need to figure out some kind of system for a stop loss. If you trade with us, then our plan is, to avoid having to take a loss if we ever need to. We do it for very strategic reasons. But our whole goal is to be accurate enough to where we don't run out of circulation, and that's the whole point. So you do this over time, and maybe you have more to start with. The more the better. But we'll just kind of show you some things to dream. 0.5% is very small. We understand that. And we're not against making a percent or two. We're just against basing a model on something that doesn't happen all the time. And that's kind of the point. So this brings you, after 1,000 trades, $293,000 minus whatever it takes for you to break down your trade, kind of start the flow back, and to account for any holds that happen. So, here's what's tricky about that. Let's say that you have $2,000. Well, you need to have something backing that up so that you can afford to get stuck sometimes and take a loss and move forward. So you might look at, how long do you think I can go before I make a mistake? 10 trades? Okay, well, that's still making $100. 20 trades? Making more than $200 because you're compounding interest. So, we look at this in terms of we would like to get our own growth cycle. We started, the only mistake that I feel that we've made in this process, and you can't really say it's a mistake because you're testing things. There's no way to know what you don't know until you're there. So we're helping you tremendously to cut through some of that. In that, time doesn't last forever, and it's very expensive to try to do nothing but trading. So we would, once we knew where we were and what our scale was, I would allow for something closer to where our actual accuracy is, so that we didn't build up a trail of our 1%, 1.3% where we're wrong. Those holds would be much easier to do something to balance out if we weren't playing it so careful and so small with so many hundreds and hundreds of trades while we were testing smaller amounts. But here you can see if you were doing this based on a model of thinking in Bitcoin and not dollars, one Bitcoin doing 0.5% for your first 10 trades would give you the equivalent of $511 of Bitcoin world money. If one Bitcoin equals $10,000, then you'd have $511 in Bitcoin from your first 10 trades. So it's a much bigger thing if you were to compound. I'm just going to round it off to the part that people would actually count based on. So your first 10 trades could get you there. Your second 10 trades would have you already at 1,048 in Bitcoin world. And, these are real things that we've tested, when you, well, I'll go ahead and set this at 1 so you can see, your one trade is worth 0.005, or this is 10,000's unit, this is 1,000's unit, 100 tens. You'd be making $50 from your trades. So let's say that you're right, that your first 10 times you've made 511. At that point, you can look and see. I like to break this down so you can actually see the math working for you. 1.10485. So that's more than just going from 1.05 to 1.10. This is significant. This is your thousands position right here. This is your tens. This is your ones. So I mean, that's $48 more from your first. From your second 10 positions. So let me just grab this much and show you what the next would be. Which, let's say that you're doing one big position per day. So in a month, you would have earned 0.161352, etc. Now, we're not working at full Bitcoins from all of our moves yet. I'm the first to admit we're working from humble beginnings. I'm working two different processes that are similar to each other, but based around a kind of different grouping of coins, working them at the same time. And both of them are, we have earned up to somewhere around the 0.1516 range without being anywhere close to a Bitcoin size. So we're doing rather well. It's just, it does take time to grow, but once you see, I'm going to put this back at the beginning of the model, what this could do if you just stay with it, 100 trades following that same model, 200 trades following that same model, 500 trades following that same model. I don't know anybody that would be disappointed with working something really hard for a moderate amount of time that could yield 12 Bitcoins from their 1 Bitcoin. Because now you're really cooking with fire. And that's where exponential growth is completely different from just doing what most people are doing, which is linear, because they're taking a profit as they go. They might wait until they get to their first Bitcoin and then take a profit, but all of the models are based on, how to make a living doing X, Y, Z. And what I'm trying to show you is combine your concept of what you would do with your investing and put the time in to do it yourself and pay yourself when you reach your goal, instead of saying, here, stranger, take a fee for holding onto my money for 15, 30 years. We're looking at something that might take a year or two. I think the market is going to sustain being able to do that. I hope that it is able to. But let's look if we took 1 Bitcoin times 0.005. And once again, this is just a base model. I mean, we do 1 and 2% fairly often. I'm just not willing to base a model on something that is far too risky in a market that doesn't always promise that kind of thing. Everybody has, computer bots that they work with. There's whales that know how to manipulate the market. There's pump and dump groups that anytime you see something going up unnaturally high, there's usually shill articles from those groups. They put out fake news saying, hey, something really great is going on with XYZ coin. So if there is an XYZ coin, I apologize to you directly. But, so these articles are, get on board before the next thing happens, and people jump on board. There's, a new person joining the market every 10 seconds. So, I don't know exactly how many, but there's thousands of new people signing up for these things. So, you want to play something safe that is predictable and repeatable. So we have 1 Bitcoin times 0.005 is 0.005 Bitcoin. And let's say that's times 500 trades. That would give us 2.5 Bitcoins, which is not bad. You put in a Bitcoin, you got 1.5 on top of that. So, and I want to make sure that I'm at the right thing here. I don't want to tell you the wrong information. Equals 0.12 times 0.005 equals. I'm doing 100, aren't I? Yes, times. Clever math tricks with calculating. All right, so we have our $50 in Bitcoin times 500 trades equals, yes, 2.5. This is just your profit. And that's rolling in. I'm setting my margin to actually 0.7. The majority of the time, it'll be more than that. So I'm always including my fees so that I don't have to think about that part of it. So this has provided, you're subtracting, in this example, we'll have 0.5 at 500, and you would have 12.1 minus the one you're investing, so you'd have 11.1 instead of 2.5. Are you kidding me? This is what exponential growth does. And if you can do 1, and you can do 10, and you can do 20, then you can do 100. If you can do 100, you can do 500. So it's just a matter of how long you're looking to do this and how good you are at it. After 1,000 trades, you could have your 1 turn into 146. And then it comes down to wanting to set margins where, how safe is it to keep going at that rate. So we break it down by looking at a daily percentage. Let's say that you were able to do 4 trades in a day at 0.5%. And that's your 1 day as opposed to 1 trade. So you would have 0.05, 0.05, 0.05, 0.05 equals 1.02. So you could look at this in terms of, if I were to try to do 4 trades a day for 180 days, I'd have this much. If I tried to do it for 240 days, I would have this much. If I tried to do it for, let's say, a year, then I would have this much. These are Bitcoins from your 1. So the next part of that, just with exponential growth, what we help to build a model on based on the rule of fifths, is how to create your circulation so that this is not your principal. This is your trade size. How many trades can you continue to flow freely before one of them gets stuck and you have to decide whether to bail it out or to let it sit. We will also show you why letting it hodl, letting something sit until it matures is the right way to go. So this should get you excited about trading Bitcoin. There's no time like the present. It may go down another time. It may go down more right now. It may go down, but it is going to go up. It sat at what I believe is its real value is sitting at 6,500. It has to work twice as hard to get there now after some of the hard fork stuff that happened. Other people do not attribute that to it. They say that This is my favorite one. People got together on Thanksgiving 2 years ago and talked about how amazing Bitcoin was, and everybody bought in. And then the market went down a lot after Bitcoin hit its peak. And so people got together at Thanksgiving this past year and didn't talk about it, so it went down. That is not what happened. It was a hard fork. It's built right into the blockchain where you can see it. You can see it right there on the market. So speaking of the market, just taking one last look. And this is, the lifetime of Bitcoin. You can see that we are in a slight up. And if this does continue, it gets more and more expensive to get in. So now really is the time. Don't go it alone. Join Archangel Alts. Let us train you in the live trading process. You do everything at your own risk. This is for entertainment, but I find earning 1 Bitcoin to be entertaining. So I hope you do too. Thank you so much for joining. God bless you guys. And for now, Archangel Alts out.